Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And guys, we got that nice strong volatility from the PPI reaction. However, it happened in the pre-market and then we got some nice level to level moves intraday. And I'm going to talk about how I traded Friday's price action and what my next plan of action is going to be from upcoming week, especially for Monday. All right, let's prepare. Okay guys, so in the previous video I mentioned to you guys about how I was watching this bear flag on the smaller time frame 15-minute chart. You can see it on a 30-minute chart, up to you. Okay, and I mentioned that it's possible we can fill out more, but I'm hoping PPI would provide some type of volatility for us. And it did provide some volatility, but it was in the pre-market. If you was trading shares and you see that it filled to the top of the bear flag here, and then we got that pre-market reaction from the PPI coming in higher. So inflation came in higher for the sellers. You know, so with inflation higher for the sellers, it's possible that it trickles down to the consumers. That's us. So if inflation is high for the sellers or higher than expected, it might come in higher than expected for the consumers as well, okay? But we'll talk more about that as the date approaches for CPI, and we also got FOMC, okay? But as far as yesterday's price action, got the strong drop, but if you trade options like me, you probably wasn't able to catch this move. However, there's always another setup. You miss one setup, you always wait to catch the next setup. Now, what do I always do in market opens? I always identify the first resistance and the first support relative to where the market opened. I mentioned here I got first resistance at 395 to 395.7 zone, and I had a price target 397 to 397.5 zone. Okay, and I think I had my first support around 393.5ish. Yeah, first support is at 393.5 with lower price targets. And you can see here where SPY opened right here. The orange line was 395 level. The bluish line was 393.5 level, which kind of defended in the pre-market. But here you see, that's the first candle of the day, just clearing that 395 level. Of course, what do? I look for calls and I play it to the next level. All right, level to level. You enter from one level, 395 breakout. I entered as it broke out. You know, that's a risk. But if it didn't work out for me, I would have just cut loss. All right, there's no magic potion, no magic secret, anything. I just played my setup. Cleared 395 as I posted in the Discord. Watch for the first breakout. 395, played to the next level. Took profits around 397 to 397.5 is zone. All right, level to level. However, we got this false breakout setup right here. Okay, so I ended up cutting my runners because I held runners, thinking it was gonna go up high. I cut my runners. I had to take time to cut my runners. I could not play this false breakout setup. However, it was a good thing I didn't play this false breakout setup because it didn't even work out. Unfortunately, though, when it recaptured 397, I tried calls. It hit 397.6's top of the range. I didn't take profits there. In hindsight, I see that I should have, but I was aiming for 398.5. It did not happen. I ended up cutting loss on a 12:15 candle when 397 was lost again. So boom, we had another false breakout setup. So I'm not gonna sit here and be sad that my trade didn't work, and I'm not gonna hold on to it if my trade setup is invalidated. However, we had a false breakout setup, so there I am, gotta reset from scratch for the next trade setup. I missed it on this candle, but I was lucky enough to enter puts using the back test and go strategy. When the support is lost, we want to see that support get tested as a resistance. So seeing on this candle there was selling pressure, I tried entering puts on this candle, and boy, oh boy, did it work out well. Worked out so beautifully to end the day. I actually posted the trade in the group here. I made a little over 5K on that trade alone. That was one trade. So overall, yesterday I was 2 for 3. I wasn't 100%. I'm usually never 100% accurate, okay? So yeah, false breakout setup worked out well. Even if I missed this setup, another setup I would have taken is this breakdown of the bear flag. I mentioned to you guys about watching that bear flag, and if it breaks down, look for puts. And that's actually, this move was nice, but this move right here, when it broke down the bear flag, that's what sent us into waterfall mode. And look at that, it just dropped. Okay, so smaller time frame looking bearish with the loss of this bear flag. Okay, but small time frame is only small time frame. Let's go to the daily chart. Now, I talked to you guys about this white trend line right here that's sloping upwards. That is a Fibonacci channel line. Okay, I have my Fibonacci channel line from the March low, and I brought it down to this pivot low to October low, and then I connected all the way up to the January high. Okay, if you guys don't know about Fibonacci channel, please look it up on, other free YouTube channels. But I really love these Fib channels because you can see here, I talked about the back test and go, which I made a video about. Check the link in the description below for this video if you want to learn about that. But here, you can see that we lost that trend line back in December 6th. Not once, but twice, we treated that trend line as a resistance. That is bearish price action behavior. Yesterday didn't show much selling pressure. Thursday didn't show much selling pressure. But yesterday, Friday, it did. Okay? So we're seeing bearish price action right now. That's in my opinion. So because we're seeing bearish price action, I'm gonna start this off with the bull case scenario. We gotta stay level-headed, we gotta stay unbiased and be prepared. For this to look more bullish to Uncle, this white trend line needs to recapture. That's at 397.68 it slopes up, so it's at 397.8 now. Okay, recapture 397.8, clear 398.5. That's a Fibonacci level, and maybe we can go back and back test that 400 level and that 200 DMA level at 42.8ish now as resistance. Let's see if we can go back test that, and if we break it, of course, that will be even more bullish. This would be a higher low. Okay, a higher low is in when a critical resistance level recapture. Okay, clearing 398.5 and 397.8 could be a sign, but I would more favor a higher low is in if that 200-day moving average was recaptured. Then I would favor a higher high, and then the rally from October continues. Okay, that's the bull case scenario. We do have CPI next week. All right, like I said, PPI came in higher than expected. If CPI comes in higher than expected as well, we could get a bearish reaction. All right, but if it doesn't, maybe we can get the rally to continue upwards because CPI data started this rally. CPI data continued this rally. Will it continue again? That's the question. But price action wise, it needs to start with recapturing 397.8. Recapture this white trend line. Recapture that 398.5. Get back above 400 and recapture that 200-day moving average. That is the bull case scenario, okay? Now the bear case scenario, okay, we're going to play this unbiasedly. Now we saw intraday that it took out my 393.5 level on Friday, okay? Assuming the market opens around here, 393.5 and 395 will be the two first resistant levels. As long as below 395, I am bearish, okay? The next critical level that I want to see, okay, this yellow line right here is also a fib channel, but it's in the opposite direction of the white one, okay? It starts from January high, pivot down to the October low, okay? Right here. Start from January high. We got that little trend line from March, August, and December high, all right? And then pivot down to the October low, all right? So what I want to see for the bear case scenario, as long as it stays below 393.5 and 395, the next critical support is 392 because of previous pivot lows. But based on this fib channel line, it's 390.8. If 390.8 fails, we break down this channel line, this fib channel line. That's a critical level. You can also look to short. If you don't trust 390.8, you can look to short if 390 fails. Remember, Uncle uses the 15 to 30 minute chart to confirm breakdowns or breakouts intraday. Okay, you can find your own way to do it, but I'm just sharing with you guys how I do it. Okay, so I'll look to short if 392 fails, of course, and I'll play it level to level down to 390.8 is maybe 390 level. Okay, but if 390 fails, I would be more inclined to swing puts, not just day trade it, but swing puts, because, you know, we got this big drop. This could be the pause. Maybe CPI and FOMC can give us the catalyst we need and continue the downtrend lower. Okay, but it has to start by breaking down that 390.8 level as well as 390 level. Okay, then we go test some lower levels. All right, got 388, 386, 385.5 zone, but the 50-day moving average is at 383.2. The next Fibonacci channel line is around 380, which also is a confluence with the regular Fibonacci retracement level. Okay, the 23.6 retracement is actually around 379.2. So we'll give it a zone 379 to 380. Okay, so very critical zone below there. All right. So the bear case scenario, or when I would swing puts, as long as it stay below 395, is if that 390.8 to 390 zone fail. All right. 398.5, maybe we can get that back test of the 200-day moving average. Above the 200-day moving average, I would swing calls. All right. I hope you guys found that helpful. But I gave you guys the bull case and the bear case so we can stay prepared for either scenario. I'm not a bull bias trader. I'm not a bear bias trader. I am a sheep. Price action is the shepherd. Bah! Now, Triple Q. Once again, I talked about how it treated that 384.88 level as resistant. Okay, today it treated that zone as a resistant again and showed a little bit more follow through by closing below that blue trend line. All right, so it needs to stay below 282 to stay bearish for me. All right, and take out that 280 to 279 zone. Below 279, I would favor more downside, a multi-day sell-off, and maybe swing some puts. Okay, I will only be bullish if it actually clears and closes, not just wash above it, get above it intraday, but then close at the below the end of the day. No, as a end and close above it on the daily chart, above 284.88, especially 287.7 and 290.7, then I would be bullish and maybe favor a higher high. Okay, but as long as below 282, I want to see that 280 fail, and then we can get even more bearish if that does. All right, Dow Jones showing some bearish follow through. Okay, we broke down that 340 level, almost treated as a resistance on Thursday. Today shows some nice follow through. So to show more follow through on Monday, take out support 334.7, 332.6. And maybe we could fill the gap around 329.6s, and with the next critical support at 325.3. All right. The bear case starts with 334.7 failing. Okay. If you want to be bullish on Dow Jones, I recommend waiting for it to recapture the 340 level, and maybe this would be a higher low, and we can go and head for our higher high. All right. Tesla. Oh my goodness. Tesla treated my Discord members so nice yesterday. I gave out a nice trade idea for Tesla. Look to short if 172 fail, or first resistance is at 175. Look to long if it clears. Put in 177ish, then 180 plus in play. You know, we play it level to level, but holy moly, it gave us a nice clearing of that 175 level. Close above 177ish. It went as high as 182.5. It hit 3 of our levels. Very, very nice day trade for Tesla. Okay, so it once again closed above that 177.5-ish level. Okay, as long as it stays above, it can backtest that support if it wants, but needs to stay above that so we can avoid a false breakout scenario. Okay, because that is a breakout, and we can see 180, 182.5, maybe test 184.5. I would swing calls if 184.5 to 185 zone clears. Okay, however, bear case, if we fall back below 177.5 or especially 175, that's a false breakout setup. I'm going to favor more downside with 170, 169 to and then 166.4 in play. Okay, guys, Apple, getting some weird price action, but it definitely stayed below 143.5. Okay, it got above it, but couldn't close above it. I'll be bullish if it actually closes above 143.5 at 147 and 150-ish in play. All right. Now, if it breaks down that 141.7, all right, that 141.7 support level has been tested many times. Okay, it's getting weaker now. And if it fails again, it's much less likely to recapture. So if it fails, look to short 139, gap fill at 137. Maybe we can drop down to 135.5 and 133 finally. All right, but bear case starts with the loss of 141.7. If you want to be more safe, you can short 139 breakdown. Okay, 143.5 must recapture to be bullish. Let's look at some inverses. All right, let's start with the VIX here. We had a false breakout scenario on Thursday when it closed back below 22.5. However, it closed back above 22.5. Now starting to look bullish again. Okay, so VIX need to stop playing game and give us some moves. All right, if it wants to go up or down. So 22.5 is support now. Must hold. If it can hold that and go clear 23.5 to 24 zone, I'd be more bullish on the VIX. All right, if it breaks down 22.5 again, it's the odds of it recapturing would be less likely. Okay, so bearish if 22.5 fails, stay bullish above it with 123.5. 24 is the next resistant level. Okay, a bearish VIX is usually a bullish SPY. Bullish VIX is usually a bearish SPY and all that happy stuff. And looking at the DXY helps as well. It got very close to testing the critical support at 104.3-ish. And, it got some buying pressure there. Okay, some bullish pressure there. So for me to say that, hey, I'll trust this bounce if it can recapture a resistant level. All right, like I said in earlier, that's how you know a higher low is in, is when it can clear a strong critical resistant level. That would be 105.3, and the odds of it clearing and not holding is less likely. Okay, if it clears again, it's more likely to hold. So if DXY can get more bullish and clear that level, that could be bearish for the SPY. We can see more downside. Okay, however, if it drops below that 104.3 level, all right, and get bearish, that could be pretty bullish for the SPY. Okay, so stay objective, stay like the sheep, follow the shepherd. That's the price action. In the wild, the ram protects the sheep. I am Uncle Charles. I'm the ram. I love you guys. Now let's end this with the option flow. Filter 500K premiums or above. And look, this is what it's showing us. 80% in the puts. And what I'm seeing here, we got some sweeps, betting to the downside, but 396 strike price, January 20 date. They got time. This is 05 million here, 3.2. This one is above the ask. This is above the ask. This one's above the ask. So aggressive plays, but not that aggressive because the size is below 5,000. I would have liked to see it above 5,000. And the strike price may be a little bit more out the money, so it's not that aggressive. But those are the only ones that stick out to me as far as the puts go for SPY. QQQ, we still getting these big block orders. So institutions are still, buying these in-the-money puts. They're still hedging for some reason. So, I don't know for sure if they are hedging, but when they buy 340 strike price for SPY, for QQQ for puts, 44 million, that's really in the money. It makes me think it's hedges, but I could be wrong. Let's see. Dow Jones, sweeps, 500K, 335 strike price for puts. Not too aggressive, but yeah, big money was betting to the downside for that. Tesla, okay, 45% in the 55% in the calls, 45% in the puts. Yeah, still seeing these big money, $1 million worth of these very in the money puts. So I'm thinking, like I said with QQQ, hedges. Nothing else is really sticking out though. We're seeing some good amount of calls here, sweep orders, but all their sizes below, 5,000. Yeah, wow. These are really out the money calls. Leaps, January 19, 2024, September 15, 2023. Okay, so we're starting to see people, it look like leaps for Tesla here, guys. Interested. I would have liked it to be more like 1.8 million like this one. But they're all, still definitely worth watching. We still have people, we got people out there believing the levels that Tesla's at right now is worth grabbing, apparently, leaps with very, very out the money calls. So keep that in mind. Keep that in mind, my nieces and nephews. Apple here, 100% in the puts. All right. And you look at these puts, in the money puts. This one over 5,000 in size. I like this one, but in the money puts as well. So we see millions and millions of dollars getting in the money puts. What are they protecting themselves from? What do they know? We got big data releases coming out next week. Nothing for DXY. VIX, Oh, okay. We got split order, not too aggressive, but it is 2.9 million, over 10,000 in size. Okay, puts for 25 strike price. All right, February 15th. Okay, so I hope you guys found value in that. Also, guys, I appreciate it if you guys been considering joining my Discord. I got holiday deals, Christmas deals. You get your first month off, $50 if you do the monthly deal. If you get the yearly deal, you get 20% off for the year. All right, Christmas deals, guys. Please consider joining Uncle's Discord if you guys like my content, that is. And if you're serious traders, if you're real serious traders and you really want to become a profitable trader, come join the family. I appreciate you guys so much. Have a great weekend. Peace.